Yeah, sure. Real quickly, I'm a professional trader. That's my entire career has been centered around trading. I was a finance, math guy in college. I had an MBA and a master's in finance. I knew I wanted to trade. I knew I wanted to trade, and trading was, I would say, in its infancy back then. It felt it always feels like an impossible market that you're stepping into. The market always feels like it is everything's already figured out. Hindsight's interesting in trading. I don't spend too much time thinking about the past in trading. You're always thinking forward when you're trading. It's good to reflect and like that, and maybe learn from mistakes. But you don't want to get stuck on a trade because trades don't last forever either. But I began trading during the internet bubble of 2000. So that was my junior year in college, and you call it 1999. Everyone knew the internet was going to be the next thing. Everyone knew it was going to be the next thing, and anytime you had anything that had .com written on it, you'd go to class in the morning, you'd buy 100 shares of it, and you might make $4,000 by the end of the day or something, something ridiculous. It was a tremendous amount of money. And I fell in love with with markets, just markets in general. And I decided to dedicate my life to it. So I moved to Chicago after my MBA, my finance degree, and began working at the stock exchange. I was a specialist on the floor of the stock exchange, and I thought it'd be easy. I thought I had this perception, and a lot of it was from the internet chat rooms and stuff like that, where the market makers were the ones actually moving the stock or affecting the stock or doing anything to the stock, really. If the stock was getting shorted, you'd have one side screaming out against the shorts, and you'd have another side, whatever. But you felt like there was somebody behind the curtain moving these stocks. And once I became a specialist in Chicago, Chicago's the secondary stock market, New York's primary stock market. So I wasn't on the floor of New York. I was on the floor of Chicago, but we were doing millions of shares. We had huge, deep books. And I realized there was another way to make money trading, and it had nothing to do with direction. It didn't matter if the stock went up or down. All that mattered was the order flow, and you got paid because people came in and they bought it for a penny higher, and they bought it for 5 cents lower, and you made a market. So market making was sort of my introduction to the idea that trading is more than a one-dimensional thing of you buy something, it goes higher, you make money, or you sell something, it goes lower, you make money. There's other ways to make money. And, I'm 43 now. I've been trading for 25 years, call it 25 years professionally. And I'm still discovering things about the market because it's always changing, and there's always something new to find, and I think that's what keeps it interesting.
Yeah, no, it's a great story, Mike. And a lot of people who trades options have been through to that, right? Because everyone really starts trading stocks, and you buy, and you're like expecting to go higher, and you put stop losses and this kind of thing. But after one discovers options, people just they look at the different in different way, right? They keep understanding that, well, especially selling premium, right? Because selling premium is something that's out of the money premium, because it's something that you can make money even if the market, if the stock goes against you, because it's the options traders, I think they experience that is they can relate to your journey. So 25 years trading, Mike, it's a lot of time. It's a long time, man.
It's a long time. So I started with stocks. I moved to futures. I did futures for about 10 years. I traded crude oil, and it was right when crude oil moved onto the screen. So there's a huge faction of traders that traded on the floor of all the exchanges. They were very reluctant to leave, and there was actually real arguments being made that humans make better markets than computers. The computers won the game. No question about that. I mean, we're living in a computerized traded world right now, and we're in the infancy, I believe, of the computerized trading world because correlations are just getting turned on. Correlations are on things that people knew they were correlated, but never thought that you'd start seeing countries become correlated with other countries, and because the ability to move money is getting easier and cheaper, and you're just going to keep seeing this efficiency naturally grow in the market, and I think that's the progression of things. And so it was about 10 years ago that I started at Tasty Trade, and my life became 100% dedicated to learning about options volatility, teaching options volatility, and trading options and trading volatility. And that was a really crucial part of my learning of how to trade, because and I think it's wonderful now that so many of your listeners, they know what a strangle is. I mean, it took me 40 years. It took me 30 years. It took me a long time of trading. I went to school for it. They didn't exist back then. Schools for trading. It didn't exist, and no one knew what a strangle was. But now people do. So there's a lot more information out there that is relevant, and it's worth spending the time to practice and learn it.
Yeah, I agree with you, Mike, 100%, man. And today you pretty much all you trade is options, right? Are you doing futures or something? Just options?
Just options. For the most part, I do options, and I do I do equity stock trades and options. So covered calls, and a lot of covered calls in this type of market. I like the covered call. It hasn't. I would say it's been a challenging market over the past couple of years, but whenever you have a market downturn, it's just the research has shown like the covered call does pretty well during the market downturns, because ultimately over the longer haul, we can expect the market to move higher. Over the shorter period, it's a 50-50 bet of what no one knows what's going to happen.
Yeah. No, that's a question that I had for you. I was going to ask about covered calls, Mike, since you're already bringing it up. You think it's a smart thing to do to buy stock? Because in Brazil, we have a really high interest rate, right? So people, they rather pick their money and put it on some government bonds. And
Right.
Our interest rates now is almost 14% a year. So people,
super high.
Yes, super high. So they say, "Oh, okay, I'm just gonna put it on bonds and use this as buying power. We can use this as buying power to trade options." And a lot of people do that. Some people, they rather buy stock. You think, and use stocks as buying power and doing covered calls or whatever, and you put their money on stocks. You think is a smart thing to do? What can you say to us about that? And fixed income or stocks? What is best to use for options?
For options, for me, it's the equity world. But I know the equity world much better than I've had more success in the equity world than I have in, say, in the bond world. And bonds are difficult to invest in because you're buying. Bonds are set up as future contracts. So you're buying ETFs that are constantly rolling over, and you might be right on direction, but you might not be generating the type of income you might expect from that from that trade per se. That's not to say some guys go big and they do it at the right period of time, and they catch the bonds on a rally or a sell off, and you're trading futures, and you're getting that pure exposure. That's one way to do it. For me, for my account, I'm a little less risk averse. I stick to the equity side. I stick with bigger name companies. I don't do the companies you haven't heard of before. It's the Amazons of the world. It's the Apples of the world. It's the Teslas. It's the bigger name companies that make up the majority of my portfolio. And I tend to stay in that world. And I've been in all parts of the trading world, and I've done it all. And I've just found the most success with things that things that have the liquidity, and those that generally tend to be the bigger name companies. The one thing I will say, like, I never got into, and I know it's a thing, it's some of these meme stocks and like GME, AMC, certain market dynamics. I have a hard time understanding, and if I don't understand the market dynamic, then I have a hard time putting any money behind it. And I don't understand the market dynamic behind the meme stocks.
Yeah. Perfect. Great, Mike. So Mike, a lot of people here that trade, they want to become a full-time trader, right? Because people they work, they keep saving money, and they put it on an account. They have a margin account, and they say, I want to become a full-time trader. You think what do people needs to have to do before becoming a full-time trader? Before saying, okay, I'm gonna quit my job, I don't like my boss anymore, I'm sick of this, I want to trade. What can you say to us about that, about capital, how much capital they need to have?
Sure.
There's a step-by-step guide.
There's no right answer. Part of it is, do you have a trade? Do you have a trade? And luck, luck doesn't count. Luck just doesn't count. I throw luck out the window. When you do it every day, when you wake up, when you wake up on a Tuesday, you don't feel like doing it, and you do it anyways. It's not lucky if you walk away and you make some money. You did a good job because you did your job. And your job is, if you're going to trade, is to work with a very efficient system. And you're trying to find. There's a couple ways to do it. I mean, like, if you're doing it professionally, you're almost looking for the slight imperfections, or the almost efficient, or the near efficiencies, things that should be efficient but aren't quite there yet. And maybe if you have a trade, then it's worth going full time. But if your trade is, the stock market's been going up, and I've been getting long, I've been getting long these calls, and it's been working out, and I've made more money than I've made in the past 3 years. I'm just gonna do this for the rest of my life. Markets change very quickly, and if you can't adapt, if you can't change to and the market's going to change before you realize it's changed. So if you can't make a change to your trading, you're going to have a hard time long term being a professional trader. But doing it on your own for your whole life, I think, is a no-brainer. I think everyone should trade their own money. Because that is, it's something everyone can do, and it's something so many people I talk to are afraid to even try. The thing I get or I hear a lot is, I'm simply not smart enough to do that, or my mind doesn't work like that, and it's unfortunate, but I think that's starting to change.
Yes, yes. Yeah, I can see that changing too, huh? I mean, more and more people are interested in managing their own money. Don't give it to just hedge funds. Hedge funds are not not fashion, not so hype anymore, right? And
Yeah.
yeah. So Mike, let's talk about the way you like to trade, right? What you have a go-to strategy. What's your before entering a trade? What do you look for, and what strategies you throw more? You throw more. This is my favorite strategy. What can you say to us about that?
It's real simple. I mean, and every trader should be able to explain their trades in a couple sentences. I mean, what I look for is I look for movement, unusual movement, large movement, and I look for correlation. I need to have both. I need to have not just one thing that's moving out of the box by itself. That doesn't help me because uh, I, there's no way there's no way to predict how high something can go or how low something can go, or will it go out of business. One thing by itself doesn't help me, but when you can start developing pairs trades, when you can start developing those correlations, you can do simple back tests to find out what the correlation is, or you can extrapolate sort of what the correlation should roughly be and where the correlation stands right now, and that's what I look for. I look for two assets that generally trade, at a certain percentage difference, and when that percentage gets a little bit too much, then I lay into it, and I use every piece of you know trading type that I have, but a lot of it's options. Options are very effective tools when used correctly because you can be very nimble with options. Uh, uh, futures are futures very direct, and
Wow,
I'm sorry.
I can hear you. Yeah, I can hear you.
Uh, can you hear me?
Yeah, I can
Okay.
hear
Yeah, futures are very direct, and stocks are they're a little simple. It's just more of a ratio and patience. But you can start playing the volatility off of the volatility of two very highly correlated underlyings when one is really moving, and it's not it's maybe you have to see, is it non-systematic risk, is it systematic risk, what is the type of risk that is causing this volatility to exist in the first place. So you do have to ask yourself some questions. You can't operate without some knowledge of what it is, the underlying that you're looking at does, and how it operates in the world. And it's important, but it's also important to take your own drama out of the story, because it's often the trader's own drama that that causes the most damage. It's not seeing the numbers for what the numbers are telling you. It's seeing a story, and it's developing a storyline uh, around something that's call it imaginary.
you. Yeah.
And I'm being a little facetious, but something like that.
No, I know. I understand. I understand what you're saying. So you like pairs trading, right? So you say, oh, this is have a very positive correlation, or I don't know, maybe a very negative correlation, and you in that case you're gonna buy something, sell the other, right?
You got it. Yep.
Yeah, yeah, no,
Yeah.
no, yeah, no, that's great. That's great. A lot of people,
Right.
a lot of people do that here. Yeah.
and and it's and you can find them in interesting places. You don't have to go to the most obvious pairs trade. I invent my own pairs sometimes. I have my own indicators that I find. Pairs come and go sometimes. Sometimes things tend to have a little bit more of attraction to other things, and you know, uh, causation and correlation are not necessarily the same thing. Just because they're moving together doesn't mean they are correlated. So you got to be careful not to give correlation to cause to just two things that happen to be moving. Sometimes the stock market's moving down, and it's just because, real simply, the stock market is moving down, and
Yeah,
everything's moving with it.
yeah, yeah, yeah. So, Mike, you always look at the VIX. There's a video that I sent you the video where you were talking to the guys there at
Yeah, sure.
Casey. Yeah, yeah, and you're talking about the VIX of allocating more capital in a high VIX environment, right? So you always look at the VIX. You allocate more capital when the VIX increases.
Yeah, I think even when we weren't really watching the VIX, um, as traders, I think you naturally do that when it's always when the market's really moving is when it seems like you have the most risk on, and it's a natural thing to do, but it's an intelligent way to trade, but it has to be done intelligently, and it can't be it can't be taken out of context too much, because what happens is account size can explode, and losses can destroy really great a really sound trading account that just simply doesn't have enough capital in it uh, for the amount of size that it has on. So the desire to make money sometimes it clouds judgment of the reality of percentage of account and account use. When volatility is low, we really don't want to have a high percentage of our capital invested in options. And I say that from selling an option standpoint,
Uh-huh, uh-huh.
because if you're selling options and you have a 2020 scenario, you have a scenario like COVID, you have a scenario like 2008. You have these they're black swan events, but they happen. They're decade events. uh, when they happen, they can ruin an account. But if you're following the rules, if you're working with it, you can find opportunity even in some of the hardest, most difficult moves.
Yeah, yeah. Yeah, no, great. Yeah. Yeah, they happen, 2008, 2020, a lot of people were selling too much options, too much puts, right? They had a lot of trouble because once you ran out of buying power, the broker just say, okay, I'm just gonna stop this trade right now, right? And
Well, sure, and
yeah,
yeah, I mean, especially this time around. I mean, we're coming off of a 15, you can call it a 15, 16 year bull market,
yeah,
and the market, it was the right trade to do, and to have lost over the past few years, to have broken even you did a great job. To have lost is expected. I don't think, um, I don't think it's been an easy few years, because whenever you have a change in status quo, like I said, you don't see these things coming. You, you only see it when you look back on the action, and then you can see how it all played out.
yeah, yeah, yeah. You think we're in that situation now where there's a change in status quo? Because selling puts have worked really well in the past years, right? I don't know, maybe from 2000 and I don't know, 13, almost 15 years of bull market. And you think now things going to change? The people who sell calls is going to perform better. What do you think now about the market right now? You have a feeling? I know, no.
Yeah, I mean, of course, short term, I have no idea, but I can tell you long term, I'm bullish the market 100%. And I say that, from the mathematical statistical standpoint, that we know the market goes up over time. What we have right now is we have a natural scenario of inflation that everyone saw this inflation coming, and it had to come, and but it's an interesting type of inflation. It's a unique inflation, and I say it's unique because some inflation generally happens in small in pockets in areas of the world. This was the entire world. It's like the ocean expanded, everything expanded. So
that's crazy.
I don't know how much has changed, but I don't think I don't think personally I'm not I haven't turned bearish on the market. I'm still long-term bullish, but short term I'm kind of whatever the market dictates my action short term. I don't make predictions because your predictions you can't beat 50-50. No one can.
Yeah, right. I agree with you, Mike. So, Mike, you do diversify a lot. You have a lot of open positions right now. Today, how many positions you have open? You swing trading. How many positions you have open?
Hundreds. I don't count. Maybe 140, 150.
Yeah. So
small. I trade small. I trade small, but I trade a lot.
Yeah. You think that's the best approach? Trade small, trade often.
Yeah, I do, because it gives you the most leverage. It gives you the ability to work with the account, and the when things go bad. A lot of trading is about being there and being present and being ready for when things go bad. That's a lot of what trading is about, is not letting things get out of control when they do, because 99.9% of the time things are just fine trading. There's nothing to it. It's not boring, but it's you can fall asleep doing it sometimes. But, for the most part, things are moving, but you want to be present for that, for the flash crash. I remember 2010, May 6th, 2010. I was trading, and the flash crash happened, and I made more money, in 3 minutes than I had made, that entire year up until May. It's just being there, being ready, and being able to pull the trigger, not pull the trigger, and having those scenarios in your head where you can kind of you can take a gamble, but you're not always betting the farm. I mean, you don't want to be doing that.
Yeah. No, that's great, Mike. Great insight, man. I'm sure the viewers gonna love, man, this interview. And I think that's pretty much it, Mike. I had some.
All right.
Yeah. It was such a pleasure talking to you, my friend. We know that you are not only people who knows a lot about options, but you're also a great trader. So later I'll send you the feedbacks, because the viewers always send feedbacks about the interviews.
Absolutely.
I'll send you.
Send me emails personally. I'm happy to respond. MikeHart79@gmail.com.
Perfect, Mike. So
right.
Thanks a lot, my friend. I hope you have a great day. Now it's too early in Chicago, right? It's not even 6 o'clock yet. So you have a great evening, my friend.
Thank you, and you enjoy the fabulous weather wherever you are in Brazil.
Yeah, I'm here in São Paulo, Brazil, man. It's a fabulous weather. I gotta
Beautiful.
tell. Yeah, it rains a lot, man. It rains a lot. Well, but Chicago, the wind, you have a lot of wind, right? Here we have a lot of rain.
Yep, you get it, but at least you got the city.
Yeah, yeah. Thanks a lot, Mike. See,
All right, thank
maybe
you.
we can do maybe we can do again some other time, my friend. Bye bye.
All right, bye now.